Hey traders, welcome back to jimfx. If you're new to trading and want a simple, proven strategy to start making smarter trades, you are in the right place. Today we are diving into the simple moving average strategy. Stick around because by the end of this video, you will know exactly how to use it. So let's get started. How is the simple moving average strategy works? Here's where it gets fun. The simple moving average strategy uses simple moving averages. A short one like a 10-day moving average and a long-term one like a 50-day simple moving average. So when these two lines cross, it's like a traffic light for your trades. So when the short-term simple moving average crosses above the long-term simple moving average, called a golden cross, it's a signal to buy because the price might be going up. But when it crosses below, called a dead cross, it's time to sell or hold off. Simple, right? So step-by-step guide to using the simple moving average strategy. So we want to see how we can apply these moving averages to our chart and how to use it. So let's break down how you can start using this strategy today. So grab a pen or just watch closely. So these are the 5 easy steps to trade with the simple moving average. So step 1, it is to pick your market. So this could be Euro USD or BTC or GBP USD. These pairs they can be able to go well with the strategy. Now, for example, this is a GBP USD chart. So after picking my market, for example, this market I'm in now, it is a GBP USD market. So you choose your simple moving averages. That is step 2. So for beginners, try a 10-day simple moving average and a 50-day simple moving average on the daily chart. Now, for example, you can use higher time frames like a 4-hour time frame, or you can use a daily chart. Okay, so now you set your moving averages. So you just go here when you're on trading view, then you go to indicators. It is right here. Then after going to indicators, you go to technicals. Okay, so then from here you can look for your moving average. So here you just choose moving average, simple here, and also you select another one. Okay, then you'll see that they will come here on your chart. Then your role is just to set them. Okay, remember we are setting a 10 and a 50. So here you come to input, then you put here your 10 moving average. So here I put a 10. Then you can also change its color. Okay, let me leave it as blue. Then I come here and also edit another one. It is a 50 moving average. Okay, so this one is a 50. Also you can change color because the other one was blue. Now you can put to any color of your choice. Let me say this gray one. So now they can be identified very well. Okay, so now after setting them on my chart, step 3 is to add them to your chart, as I've done it here. Then step 4, it is to watch for the crossover. So we buy when a 10-day simple moving average crosses above the 50-day simple moving average. Okay, so now for example here, this is our current market structure, right? So can you see this? Remember, this blue one is a 10-day simple moving average, and always we can buy when it crosses above the 50. This gray one, it is a 50 moving average. Okay, so now here we are seeing a crossover right here. So when you see this one right here, we are seeing a crossover. Can you see this? So this one clearly indicates a crossover. This gray one, it is a 50 moving average. This one is a 10. It has crossed over. So now this is a buying because it has closed above a 50 moving average. Okay, so now also another example you can talk about is right here. Okay, so now this was a very good trade. It was a swing trade because it is always better to use it on a higher time frame. Okay, so now you can see this cross. Okay, when it crosses above, it clearly indicates to you that it is a buy signal, so you should not hesitate to take a trade. Okay, so now you can see, can you see this? So this one, it closed above a 50 moving average. Okay, this 10 moving average it closed above, indicating to us that yes, we are going bullish. Okay, so now it is a game changer, right? So now for the sale, For the sell trade, it has to close below. Okay, so now for example here, this 10 moving average, it has to close below a 50 average. Okay, a 50 moving average. You can see the example here. This blue one has crossed below this gray one, which is 50, indicating to us that we are bearish. Yes, so now traders will be able to enter their long short positions from there. Okay, so now also there are several examples that you can look at on your time frame, right? So now there is that one you can see. Okay, so now whenever it crosses below, it is shows to you that you have to take a short position. Now step 5 is to protect your money. Yes, now you have got an entry. How do you protect your money? Always you set a stop loss to limit losses and the take profit to lock the gains. Okay, so always we put our stop loss below a 50 moving average, right? So now when we enter here after crossover, so now always the stop loss has to be below our 50 moving average. Okay, and also the take profit, you can always you can target any percentage you want. You can risk you can decide to take a 1 to 4, a 1 to 5, or even 1 to 10, 1 to 3, any you are risking. Okay, so now always make sure you put a stop loss on your trades. Okay, and also take profit so that when the market goes in your way, you can get the profits. Okay, so now let's see some tips for success. Okay, these are some of the tips that I will help you, yes, to succeed with this strategy. Number 1 is to stick to the trending market. Okay, so now always you have to choose the trending market. Yes, the trending market, always these simple moving averages, they shine when the prices are moving up or down. Okay, not in the sideways. So now for example, you can see right here, this is a trending market. Okay, it is a trending market, it is a bullish market. It is just breaking highs. Okay, so now this one, it will clearly show you the entries. The entries will be very clear to you. Also, you can choose a market which is going down. Okay, so now number 2 is to use risk management. You have to never risk more than 1 to 2% of your account on one trade. Okay, for example, you're having your $1,000. Don't risk again $500. That will be not good risk management. Okay, so now number 3 is to practice fast. Always use a demo account before using real money. Now most brokers, they offer virtual money that you can use to practice with your trades. So you try this on a demo account before using real money. Trust me, it is a game changer. Okay, so that's it. The simple moving average strategy is your ticket to trading with confidence. So it is easy, effective, and perfect for beginners. So you want to see more trading strategies and perfect your beginners? So want to see more trading strategies? Drop a comment below and let me know. If you found this video helpful, smash that like button, subscribe, and hit the bell so that you never miss any video. Bye.